flagship events where we connect agri-food entrepreneurs to each other, where we share critical insights in the landscape, and where we build a robust network of agri-food entrepreneurs with the aim of supporting their businesses to scale. Today's session is one that I know
Good afternoon. I think we have lost Rama due to internet connections. It happens. Apologies for this. Hopefully she'll join us shortly. But to continue with what she was saying, I'll just go through the agenda today. We are joined by two incredible leaders from Sahel Capital, in which we will be discussing various aspects around financing, funding, and all you need to know regarding agribusinesses. We'll start off with a welcome, moving on to opportunities for you. And I think Ramat is back. Ramat, can you confirm?
Thank you. Thank you so much, Ify, for stepping in. My internet went off, but I am back now, and hopefully my internet stays this time around. So I sharing.
I think we're still having some trouble with Ramat. So moving on, we're going to start with the welcome. And in true First Thursday fashion, we would love for you to introduce yourself, get to know one another through the chat that's available to you. So please tell us your name, your country, and the name of your agribusiness and what you're into. We'd love to know more about you and what you're doing in the agriculture and food space. If you're not in the space yet, why you'd want to join, what is exciting you about the sector so far. Please feel free to connect with one another. That's why we're here. We want to learn about each other and learn from each other. Ramat, anytime that you are back up, do let us know. In terms of a pulse check, we want to know how you're feeling today. It's Thursday, it's almost the weekend. We're all very excited. Using the emojis in the chat and the chat box, please let us know how you're doing. I have my colleagues on the line who will also do the same. If you have any difficulties, please let us know. We'll be happy to help you in that sense. We're going to go swiftly onto a poll. We're moving quite fast through the introduction because we know that we're going to have a lot to discuss during the meaty aspect of First Thursdays today. So we're going to launch the poll. There we go. So please do fill it out. It helps us understand where our audience is coming from, what you're currently doing, and it helps us inform how we're going to structure this, not only this First Thursday, but many to come as well. While the poll is running, we are going to give everybody, I guess, 2 minutes to quickly fill it out. If you haven't, please do so. If you have any difficulty, let us know through the chat as well, and we'll be happy to assist you. And Ramat, back to you.
Thanks so much, Ify. I was actually quite enjoying having to sit back and hear your voice. I think we're pretty much excited about this session, and thank you so much, Ify, again for stepping in. I hope my internet is a bit more stable this time around, and definitely excited to meet all of the agribusinesses and stakeholders who are already introducing themselves in the chat. Please introduce yourselves. And when you see someone who is quite exciting for you, please reach out either directly or in the chat. We're here to network first and foremost. Please do not forget that. And definitely we are here to share experiences and knowledge. And we definitely hope that you're going to go away from this session with lots and lots of insights for your agribusiness. So the poll is currently on. Please do fill in the poll so that we can better understand our audience and continue to improve on our sessions and how much information we bring to you. So while the poll is ongoing, I am going to move on to the next thing and introduce Nourishing Africa. So you might be a first-time attendee at First Thursdays because this is a monthly event, and we've had repetitive audiences through the months. Actually, yes, but in case you're not familiar with what we do about First Thursdays, We are a digital platform supporting agri-food entrepreneurs to scale their agri-food businesses. And how do we do that? We do a lot of trade linkages, a lot of learning, such as what we are doing now, and we're a community and resource hub. Our focus is entirely on supporting agri-food entrepreneurs, agri-food businesses to grow. And from our trade linkages activity, where we support local agribusinesses to access global and international markets, to knowledge sharing sessions such as First Thursdays, podcasts, and events and trainings and masterclasses that are tailored to the local solutions in Africa. And we have a robust community hub where agri-food entrepreneurs connect with each other and are able to share learnings and experiences with each other. And we are, in case, I don't think, okay, yes, the screen is back. We think it is really important to hear from community members who are within the Nourishing Africa community and have benefited from their membership at Nourishing Africa. So we're going to play a very short video where you will listen to agri-food entrepreneurs such as yourself. Can the video come on now? I don't see the screen anymore. Okay, maybe I can play the video on my phone, but please confirm that you can still.
Business owner group about 2 years ago,
great.
and that has been the best decision I made as a business owner.
My name is Angela Limo from Mavuno Seed. Mavuno Seed is based in Nairobi, Kenya, and we deal with vegetable seed for sowing. I joined Nourishing Africa to learn more about how we as Africans could come together to nourish with one another. Some of the tools and resources I found very resourceful is the sharing, especially on the groups. So many people encouraging us and with what we also go through and I go through here. Also the resources that are shared online about opportunities of funding and other opportunities for networking are also amazing tools.
My name is Mitchell Chukwudi, CEO of Agrimo, the producer of Fruitsy natural drink in Nigeria. We joined Nourishing Africa in 2019, and so far we've been learning a lot in terms of network capacity development and how to structure our business for new markets, how to structure our business for scaling in Africa. And so far Nourishing Africa has taught us a lot in terms of how to position our business, how to position our team to win more better and more smarter. We to do more better, to tell them that we and we prove more better, and we'll make them see that their impact on us was not just a waste.
My name is Vera and I'm from Ghana in West Africa. That empower caregivers to have a sustainable way of feeding their children right. I had the opportunity some 2 years back to become a member of Nourish Africa. I must say being a member has given my company a raise in my profile, as I had the opportunity to be interviewed by IFIS some years back, and I automatically have followers coming on to follow me on Instagram. Another great opportunity is that I get updates on grant and funding opportunities from Nourish Africa, which is daily. Lastly, one of the key things I've gotten from Nourish Africa is getting the opportunity for free training modules from international organizations like GAIN, FAO. I encourage every agripreneur who wants to scale up his or her business to join Nourish Africa today.
Claudia Castellanos, co-founder and managing director of Black Mamba. Black Mamba contributes to the SDG of Zero Hunger by training the farmers we work with in regenerative agriculture and fostering them to grow their own food besides growing fresh produce for Black Mamba. Our work as Black Mamba wouldn't be possible without the support of organizations such as Nourishing Africa, Nourishing Africa is an amazing organization that has a platform full of resources and knowledge, very useful for agripreneurs and anyone in general that wants to learn more or contribute to the agricultural landscape in Africa. So if you're an agripreneur willing to grow your business, or if you're interested in improving the positive footprint.
Thank you for sharing that. I think that's actually robust enough. And I definitely encourage agripreneurs out here who are on this call and you're not a part of Nourishing Africa yet, you should actually join Nourishing Africa to connect with other agri-food entrepreneurs and scale your business. Now this is showing you, the benefits of joining the Nourishing Africa Hub. It is really a hub that provides opportunities for African agri-SMEs to scale together. We have seen how fragmented the landscape can be and how lonely the journey of an entrepreneur can be. And so we've created this community that is self-driven by these entrepreneurs, and where we provide support and linkages to markets, to data. And so you'll find an opportunity to access, strengthen, and scale your agribusiness, preparing your agribusiness to enter new and international markets, referrals to funding, access to the entire vibrant community of entrepreneurs, global market linkages, and so forth. And we have a community of agripreneurs from 37 African countries, which is really a thriving hub for you to connect widely across the continent and beyond. So you definitely should be signing up to join the hub right now. My colleague has dropped a link for you to do so. Now, in our true fashion of First Thursdays, we are going to share some opportunities for you. These opportunities cut across funding, capacity building, events, online courses, and more. As you have heard from other agripreneurs who spoke earlier in the video, we are very meticulous and particular about sharing opportunities with agribusinesses. We have seen so much that is coming into the landscape, but are they getting into the hands of agripreneurs? The answer is no. So we take very conscious efforts to curate these opportunities for you and put them right in front of you. So I'm going to invite my colleague, Henry, who is based in Nairobi, Kenya, to share some of these opportunities for you. And of course, another colleague would be dropping the links right in the chat. After this session, we're going to go right into the speaker insights, so do not go anywhere. Henry, are you available?
Yes, I am.
Thank
you very much, ma'am. So I'm going to take you through some of the opportunities, starting with the financial support. Polite reminder that these opportunities are available on the Nourishing Africa Hub. The first one is the UNDP Waka Youth Innovation Challenge that targets all African countries. It's a grant and the deadline is on 2nd of September. There is also the CFC Support for Commodity Development. It's also a grant with a deadline of 15th of September this year. And the last one under financial support is the UN CAP that targets countries such as Nigeria, Kenya, Rwanda, and Uganda. It's providing equity. So if you are in one of these 4 countries, these are some of the opportunities that you can apply for under financial support. Is the capacity building. If you are looking to build your capacity as well as that of your team, there is the Thrive Global Impact Challenge for innovative startups. And this is for all African countries. It's an award, and the deadline is 26th of this month. We also have the 2022 African Plant Nutrition Outreach Fellowship. It's open to all agripreneurs from Africa, and this fellowship seeks to support education, training, and communication programs that are relevant to improving the use of efficiency of plant nutrients. Again, the deadline is on 31st of this month. And lastly, we have the Accelerator 100, which again is open to all agripreneurs from all African countries. The deadline is on 31st of this year, 31st of December this year, sorry. Under events, if you're looking for events to attend to, again, these are also available on the Nourishing Africa Hub. You are free to apply and register for them. There is the inflation, how it's affecting food waste. If you intend to understand, if you plan to understand how the inflation is affecting food waste, this is an event that you might find interesting. It will be happening on 24th of this month. It will be a virtual event. And of course, we have the AGRF 2020 Summit that will be happening between 5th and 6th of September. It will be an in-person event in Rwanda, and entrepreneurs can also attend virtually via Zoom. Lastly, there is the Sahel Changemakers Food Systems Conference by ourselves, Nourishing Africa, and our sister company, Sahel Consulting. This will be happening on 15th next month. It will be a virtual event, and there's also the option of attending it in person in Lagos, Nigeria. We also have trainings and workshops which are on the Nourishing Africa Hub. The first one is by Inclusive Business Action Network, IBAN. The course is Developing and Scaling Inclusive Business Models. So if you are an entrepreneur anywhere in Africa and you want to know how you can develop and scale your business, this is one course that you might find interesting. Again, it's all available on the Nourishing Africa Hub. The next one is the grain milling course. It's provided by the Africa Grains Online. I see a question of how to apply for these opportunities. My colleague is going to drop the links of the trainings, as well as the capacity building opportunities, as well as the funding opportunities that we're sharing. So the last one is by the Agri Training. The course is on fall armyworm mitigation. It is also available on the Nourishing Africa Hub under the training and workshop section. We also have podcasts, which are very interesting. There are two that we have sampled here. One is on business enterprise strategies. Is access the alternative to ownership? You can listen to this podcast on the Nourishing Africa Hub. My colleague has just dropped the link. Then there is also the one on building a winning pitch. If you intend to pitch or know how to go about pitching, that's a podcast that you might find interesting. Thank you very much, Ramat.
Thank you so much, Henry. And I actually love where we landed with that podcast on a winning business pitch. So today's first Thursday, so we have decided to bring in something extra. You know, today's session is on financing your agribusiness, and we have two incredible speakers with a wealth of knowledge in investment in agribusinesses and financing. And today we've said we're going to allow up to 2 or 3, depending on the time, agribusinesses to actually practice their pitch with our speakers. Exciting, right? So if you would want to do that, start practicing right now. But I imagine that our speakers have tons and tons of insights to share already that would provide some tips for you to do so. So I'm going to go right ahead to introduce our speakers, but do not forget that the poll is still on. We're going to close that just before our speakers come on. So if you are yet to take the poll, please take them now. So going into our speakers, and we like to provide a background just so you understand that these are experts who have come to share their insights with you. And we are incredibly grateful that they are coming here, to share all of their incredible experiences with us. So the first speaker today is Mope Ogunsidire, who is partner at Sahel Consulting. She has an incredible background in international corporate and project finance, and is an experienced investment professional with 2 decades experience in direct investing. She has executed agribusiness transactions across the value chain from primary production to food processing and agricultural services. She's worked on and closed deals in Africa, North and South America, Europe, South and Southeast Asia, and Australia. To date, she has originated, structured, and executed equity and loan investment worth $257 million. That amount actually almost intimidated me, and successfully syndicated loans of up to $204 million. Up to $204 million. As part of the agribusiness team at IFC, she has executed project finance transactions and arranged loan syndications for IFC clients in Latin America, Africa, and Asia. Mope is a Sainsbury Management Fellow and holds degrees in civil engineering and finance and an MBA from IMD Switzerland. Welcome, welcome, Mope. We are so grateful that you've taken the time to join us today.
Thank you.
Swiftly, thank you so much. We can see your video, which is awesome. So I'll move swiftly to Deji. I know I saw Deji's video the other time. Deji is a principal at Sahel Capital, and he has more than a decade of work experience, of which 7 years were in operating roles in FMCG, agrochemicals, and seed sectors. Since joining Sahel Capital in 2016, he has led investment and provided portfolio oversight across a broad range of crop value chains. He's previously worked at Syngenta and Procter & Gamble and has lived and worked in Nigeria and Switzerland. He sits on the board of directors of LMZ and Kosharis Farms. He's a chartered alternative investment analyst and is also certified as a project management professional. Holds a BSc in chemical engineering with first-class honors and from Obafemi Awolowo University and an MBA from INSEAD Business School. I would really, at this point, love to say a big thank you again to our guest speakers. They're bringing a wealth of knowledge that I know would benefit agribusinesses on this call today. So we're going to go right into it. So we would start with a brief panel discussion between Mope and Deji, moderated by me, because we want to discuss the nitty-gritty of how agribusinesses can actually leverage the right financing options, approach the right funders, and get the right funding for their businesses. We've seen agri-food entrepreneurs make so many mistakes when it comes to fundraising. And there's a wealth of opportunities out there that agripreneurs might not be aware of or might be misusing. So we really think this discussion would be entirely critical to the next steps you'll be taking when it comes to fundraising. So I have Mope and Deji here, and we're going to go right into it. So I'm going to start with a question that many agribusinesses had asked us at Nourishing Africa. Remember, we have a community of these agribusinesses. And many of them would reach out to us and say, I've been established for 2 years now, and I'm ready to start accepting external financing. I've always been the one putting in my money into my business, and I'm looking for a loan. Nourishing Africa, do you have a loan for us? So the question here is, at what stage, and I want us to start with this, at what stage should an agribusiness actually start considering raising external financing? I'm going to throw that to you, Mope.
Thank you, Ramat. I think what I would say is that you should think carefully, and I would advise not going to look for external financing until you've taken your business as far as you can with either money from yourself or family and friends. And when we're talking about external financing, I think we should distinguish between investments, so financial investors coming in, excuse me, and grant funding. Grant funding, for example, is also external financing. Now, once you get external money, that is external money, let's say commercial money, that means you're going to share the returns from your business. So whether it's a bank that's giving you a loan, you are going to have to pay them back, which reduces what you will get. And if it's equity, that means you're going to give up part of your company. And so my advice would be that once you've taken your business as far as you can with your own money or friends and family, I would generally start with what you might call softer money, so like grant money and so on and so forth, and then move on to looking for loans or equity and so on. But really, you should take the business as far as you can on your own money, because when people are looking to fund your business, they will want to see what you've done with the business already. So yeah, I think that's how I would answer that.
Thank you so much, Mokwe. That's very, very useful. And already you've started mentioning some, terminologies that I would really want us to break down. I heard you mention loans, equity, and grants. So I would actually just move swiftly to Deji to help us with, these definitions. What are the common types of financing available to agri-SMEs? And what are the major sources of these financing options? And how can we get the equity loans and so forth?
Yeah, thanks, Ramat. And I think the general rule of thumb is that when you want to raise finance, you should be looking to match your cash flow, with the use of fund or with the stage of the business that you are in. So depending on what you want to use the funds for, that will also determine the kind of funds you should be raising. So like Mukwe said, people raise grants, there you have equity loans, you have equity and you have loans. And even the loans can be divided into multiple types of loans. You have working capital, you have, asset finance, you have term loans. So I'll give you an example. So if, for example, you're looking to raise, you want to buy a truck, for example, for your business, in which immediately you begin to generate cash flow from that business, from the use of the truck. Then, of course, what you want to use to finance that is something that you can start paying down from. So you might be looking at maybe an asset finance type loan that you can already start paying from, almost immediately, or a term loan, maybe 3 years, 4 years that you're going to spread over a period of time. But if you're looking to do a capex investment as a capital expenditure, that is probably going to take a longer time, and you won't start generating cash flow from it almost immediately. So maybe you want to build a factory, or you want to build a farm, and it's going to take time before you start generating cash flow from that investment. Then the most appropriate type of finance is to use equity or equity-like investment, which is more patient. Equity is more or less, somebody buying, investing in your company, taking part of the shares of the company, but they are not expecting immediate payment from you. Rather, they are pushed forward the timing of them getting their returns on that investment. So they want to go on that journey with you. So it's easier to get equity finance for that type of investment. But if, for example, what you're looking to do, you need immediate inventory, you want to buy maybe rice paddy to process, or you want to buy soybean to process, this is almost immediate. You need it for a short term, buy, sell, pay back. Then what you're looking for is a short-term working capital facility. So really, you need to match what you want to do with what, the type of finance you are raising. So it even helps you when you're speaking to people about raising funds. Now, my assumption is also that the kind of business that would adopt this is a business that is already generating cash flow. So you're already in the growth stage, or you're already, in the scale-up phase, in the matured phase. But if you're very early stage, your cash flow is still very limited. The first thing is what Mokwe has said. Bleed that business. Try and bootstrap as much as you can before you raise funds, because equity is the best in that stage when you are very early on. But the earlier you raise equity, you get diluted very quickly as well. So I think people underestimate how much they can do bootstrapping. And the first thing they think about is, I want to go and raise funds, for businesses. So I hope that helps clarify the different types of instruments that we use.
Yes, indeed, Deji, it helps to clarify these types of financing instruments. And I hear you loud and clear. In fact, I put it in all caps in my notes. Bootstrap as much as you can. Thank you, both of you, for highlighting this. We've seen so many entrepreneurs who, within the first 6 months to 1 year, they're already asking Nourishing Africa, please, we need loans. And we really cannot really emphasize it enough. Thank you so much, both of you. And you've also said to match the funding to what you do and what you want to do, the needs of the business. I think this is really important. So you've already highlighted a bit about this, but I think I would want Mokwe to help us break it down further in terms of debt versus equity. Well, for me, I would say these are the most popular financing instruments for agribusinesses out there. And I would really want to have us speak and say an expectation, sort of, putting them side by side to further understand what these two options mean for agribusinesses. Over to you.
I think the essential difference between, say, a loan and equity, when you get a loan from anybody, they give you the money and you give them back the money they've given you with some return for them to compensate them for the risk. On the other hand, when somebody gives you equity, what they get back is they get a part of your company. So somebody giving you a loan is not going to own any part of your company. You give them the money and that's the end of it. With debt, whatever money you get, it means that you give up part of your business. Now, to understand the difference with a loan, obviously there's risk, but with equity there's even more risk. And the reason is because when on your balance sheet, as it were, there's what you call a hierarchy. So if everything goes wrong, whatever money is left, the way it is divided up is that the first people who get money will be things like, salaries, taxes, etc. After that, the next people who will get their money is the debt people. So your loans, so your bankers, etc. They're the next people. Then if there's any money left at all, the owners of the equity, i.e. yourself and anybody else who's there, gets the money. So as you see, equity is the riskiest because first of all, there's no guarantee. Secondly, there's no fixed, normally anyway, just typically, there's no fixed repayment as with a loan that says you will give back the money at these regular intervals and with this interest. Basically, anybody who gives you equity is going to take the risk that, the company does well and there's money and everybody can make money. And so because of that, in terms of what you are required to do, whether you're getting equity or whether you're getting debt, it can be very different. So let me look at, first of all, say like the requirements. So to go back to what Digi was saying earlier, if you want to get a loan, your lender will want to know that there is money to repay their loan. So generally, if you're going to get a loan, you want to have cash flows. You have to be able to show that you have cash coming in to pay the loan. And so if I go back to Didi's example, if you're going to buy a truck and you're going to make money immediately, you buy the truck today, you put it on the road, you can start selling and making money. Then yeah, a loan is fine for that because when you buy it, the banker knows that you will be able to pay back and so on and so forth. On the other hand, if you're a very early stage business where the business is promising, but right now it's not showing a lot of cash, then for that, equity is better because with equity, once the money goes in, there is no, you are not obliged to pay anything unless and until the company is, say, making a return and you can pay dividends. So equity is better in that sense. So with a banker, they will want to see cash flows because they want to see their loan repaid. With somebody who gives you equity, on the other hand, what they want to see is a business that has the potential to grow because their money is going to come back from after the business has gone on for 3-5 years or whatever, and it has grown. Obviously, their stake in the business is now worth more. So this is a very broad characterization. But in general, that's it. So for loan, people are looking for cash flows today, that there's good cash flows. Equity, it's the growth and the prospects in the company that they're looking for. In terms of expectations, this is linked to risk. So I was saying earlier that debt, there's risk, but with equity, there's even more risk because really there are no guarantees. And as the saying goes, risk and reward. If somebody is taking a lot of risk, they expect to be compensated in the reward. And what that means is that equity is more expensive than debt. It may not seem like that because you get the money and you don't have to be paying and you might not see an interest rate, but equity is more expensive because it is riskier. So perhaps the way to think about it is that if you take a loan, your banker might say, okay, I'll give you, I'll give you $100 and I will ask that I get back 10%. So at the end, after you've paid off the loan, I would have received from you 100 plus 10, $110, and that's it. On the other hand, with equity, because the risk is higher, if somebody gives you equity of 100, they are not going to settle for 10% because the risk is more. So it is what that will be is what they're looking to do is get back, say, for example, 30% on the 100. So that means that at the end, and even though it's not, so that 30% can come either in the form of dividends paid along the way as the company makes profit, or it can come later when the company has grown. And if they sell their stake in your business, then the return on their original investment of 100 should be 30. So that's the thing to bear in mind is sometimes equity might seem like it's not expensive because you're not really paying, but the expectation from the person putting in the equity is going to be higher because the risk is higher. And in terms of, for example, say conditions, with loans, you will have conditions such as limiting how much more money you can borrow because the lender is worried that if you take too much debt, you can't pay their money. You will have conditions linked to how you run the business. So you will typically have covenants that say that you will always have certain ratios. So you will not have more debt than X, or that you'll have something we call a current ratio, which is saying that your current assets must always be more than your current liability. So you'll have a specific linked conditions like that. With equity, it's not quite the same. Again, remember that they're buying a part of your business, but there's no schedule or anything that says you must pay this back on the other. Depending on how much of your business that your investor gets, the involvement can be everything up to from a board seat, for example, where they are part of the board of your company, which means they're part of the decision making, to having a minority stake, and in which case, again, maybe they don't have a board, but you will have, for example, a shareholders agreement where you agree the things that can be done. And part of that, for example, might be a business plan that says this is the strategy you're going to follow. It may also be in terms of use of funds, so that you're taking this equity because you want to build warehouses or something. So this money should be used for the warehouses, but you're probably not getting the same conditions as with the bank, where they're asking you to maintain certain covenants and they will check those every year. So that's just a very brief overview. It's very incomplete, but I hope it gives you some idea of the differences between the two.
Excellent, but it definitely does. That was really comprehensive, actually. And just to highlight some of the really important points that you've mentioned in terms of putting loans and equity side by side. Cash flow extremely important for loans, while growth trajectory extremely important for equity. Equity is more, and the risk is higher compared to loans. And you also mentioned the restriction to payments, where that's limited for equity and very, very much higher when it comes to loans. That actually brings to mind something else for me. Can agri-SMEs actually combine debt and equity financing? You mentioned, where borrowers would specify that you shouldn't go higher than a certain loan ratio. So maybe we can go to Deji for this. Can SMEs actually combine both, and what are the implications?
Yeah, I think the short answer is yes. In fact, I think the more sophisticated an agri-SME is with how they structure the funds they want to raise, I think the better it is going to be for them. Don't forget that I mentioned earlier that the kind of finance you should be raising should be very appropriate for what you want to use the money for. So, there have been instances in which someone raises a term loan, a capex loan that is expected to pay over 3 years or 4 years, and has a moratorium of maybe 3 months, and then he's supposed to use that money to build a factory, and the factory is not yet done in 1 year, 1.5 years, and guess what? He needs to start paying back the principal and interest immediately, principal within 3 months. So the question is, where does he get the funds to do that? So if you have a company that is looking to backwards integrate, for example, and wants to build a factory, but also needs money to buy raw material or inventory, then that kind of company should be looking to structure 2 different types of instruments. Raise working capital for inventory as maybe a short-term working capital, maybe 1 year to pay back, because the moment he gets that working capital, he can start processing with whatever facility he already has, and can start selling and paying back on that working capital rather than taking that as a term loan. But then on the factory that he wants to build, because he knows that that is going to take a longer time, It can, depending on how soon, and it can either do a term loan or do better still an equity to build out the factory. So based with that kind of structure and sophistication, it's easier for you to either be speaking even to the same investor, the same financier, or different financiers to tell them that, look, you provide me with equity, you provide me with debt. And I think a lot of investors also are at peace with the fact that when you have multiple investors looking at the same business and coming in together, it gives them some form of confidence and comfort that, two different people are looking at the business, and hopefully both of them cannot be wrong, even if they are having a blind spot that they are not seeing with the business. So the short answer is yes. You can raise debt, you can raise equity. Even within the debt spectrum itself, you can even raise multiple types of debt. So for example, there's a particular investment we are looking at, and it's a loan we are giving, but we are looking at both asset finance, which is going to be more or less like a 3-4 year loan facility with some moratorium on it, but we're also looking at a working capital facility for them to use to aggregate some commodities from the market. So those are two different types of debt instrument. One is short-term, less than 1 year. The other one is 3 years facility. They are different. So think about your business, think about the specific needs that you have, and then tailor the request that you're asking for. When you speak to investors that way, they really know that you understand your business and you know what kind of financing it requires. And I think that it helps you it also helps to set you in good light with investors.
Thank you so much, DG. I think that answers the question absolutely well. I have just one more question for both of you, and I think we want to take this in 1 minute so that we can move on to the presentation. And we also want to allow time for questions from the participants. So if you already have some questions, please drop them in the chat. I'm going to pick them up and throw it open to DG and Mokwe. So very quickly, I think while we're still with you, or let's go to there's this question that I actually want to know based on, we've received several of it from agribusinesses as well. Agribusiness is considered extremely high risk, and this is really what Sahel Capital does, invest in agribusinesses. So how do you typically work with these agribusinesses to, mitigate the risk of failure and ensure that they are successful and, you can generate your ROI?
Well, there are various ways that we work to sort of de-risk, if you like, our investments, but also to help the companies manage their risk. And to some extent, it will depend on the sector that you're in. One of the reasons agribusiness is considered risky is obviously you face risks that are well beyond your control. So you have weather, you have, you could either have lack of rain or too much rain. If you're in the poultry sector, you can have disease or sickness wipe out all your birds. So it does depend to some extent on the sector. In terms of how you can mitigate, insurance is one way. So if possible and if available, it is to take out insurance either linked to weather or, for example, for the birds. That's one way. The other way that here I'll talk about mitigating the risks also from the point of view of the investment as well. So both for the investor and for the agribusiness, if you're going to take out financing, one of the risks you're going to run is not being able to pay and therefore losing your business or something in that way. And so we've spoken a lot about matching the kind of money you get to what you want to use it for. So that's an obvious one. That's good. The other one is that if you are going to take out foreign exchange is very important for us here in Africa because, well, for obvious reasons. But for the investor and also for yourselves as agribusinesses, if you're going to take out, for example, a loan and you want to take out a US dollar loan, then it's better to take out a US dollar loan if your business is earning some kind of effect. Some, ideally plenty or 100%, because when it comes to time to pay back your loan, obviously, if the exchange rate has really depreciated, then you're stuck with having to pay a lot of money that you can't because you've taken out the loan. So those are just some of the ways, and I'm addressing it both from the point of view of us as investors, obviously, and also for the for the agribusinesses themselves. And I will state the obvious. Obviously, good management is critical. And one of the other, and here for the agribusiness, what I would say is that when you are looking for financing, look for partners. Look for people who understand the sector. So this CEFA, the fund that we'll present to you in a second, is doing mostly loans. We will do some equity. FAFIN, which is the first Sahel fund, is an equity, a private equity fund. And when I say look for partners, this is what I mean, that if you look for partners, people who understand your sector, they can bring expertise to bear to help. And so I'm sure that you can give you lots of stories where in Sahel, for example, we have expertise in various sectors. So we've done rice investments, we've done poultry, we've done dairy. And how does this help? It helps because you have somebody who is in with you as a partner, but who can also help you in terms of technical knowledge, who can connect you to their networks as well. So that's another way to make your business go better. And then the last thing I would mention again within the perspective of financing is that also with impact funds like CEFA and funds like FAFIN, typically there are what they call technical assistance funds, which can be used, for example, to build your capacity, as it were. So again, within the context of looking for financing, look for partners, for people who can bring more. So either technical expertise, technical assistance, and things like that.
Thank you so much. That was incredibly useful. And I know it's already having some values for some entrepreneurs in the call. So I'm going to end with Deji. And both of you have actually pointed out a bit around, some mistakes that agribusinesses typically, make when trying to raise financing. Maybe we can have a bit more, and just to put everything into shape and form. Deji, can you help highlight a few common mistakes that agribusinesses make when they're approaching funders or generally raising external financing?
Yeah, sure. Just straight to the point. I'll just mention three. The first one that I see quite a lot is that feeling of entitlement, and I understand the pains and troubles that entrepreneurs have gone through. But you speak to a lot of entrepreneurs and they feel like they deserve that break. They deserve to be invested in. But unfortunately, the world of finance does not work like that. And the sooner you understand that, I think the better. Finance or funding does not chase after who feels they deserve it. Rather, it goes after where it sees the opportunity. So I think we all need to lose that sense of entitlement that I've worked hard, I've labored. Why are banks not giving me money? Always remember that the people providing the funds, it's not their funds they are giving out. It's some other people's money, and they have a fiduciary responsibility to return that money to the people that give them the money to manage on their behalf. That's the first thing. The second one is not demonstrating cash flow very early, or being clear about how you want to achieve that. There's this popular story I usually share, I think it was Vusi Tembekwayo, the South African gentleman, venture capitalist, that said that story, that if you see two companies, for example, both are poultry businesses, one has built the most sophisticated poultry pens and is looking to raise financing to, stock his pen, while the other person has not built anything sophisticated. Rather, he has gone to buy eggs from somebody who was already producing, was selling, buying eggs, selling, making some money, and has come to raise funds to build pens. Who are you going to finance? It's a very simple, question. I'm going to finance the person that has already demonstrated his ability to turn around cash, than the person that has demonstrated his ability to build very beautiful projects. It's really not project management we are doing. We are talking about making money, sales. So at the end of the day, whatever you need to do to get to cash flow very quickly, do that very quickly. And then you realize that a lot of investors will pursue you to invest in you. Then the third is integrity. I think while it's not just putting forward your foot as being a person of integrity, I think you should let it shine through from everything about your business. As we look through your business, as we ask questions, let it be clear that this person has run his business as a straight person, as somebody who we can trust. Because at the end of the day, when we are investing, there's so much you can do in terms of all the analysis, understanding the sector, the economy, your cash flow. What we cannot analyze is you as a person. So we want to be comfortable that the person we're investing in is going to be someone who ultimately will be willing to make good on the investment that we've made. I've been in a situation before where a company that we're looking to invest in was telling me that, look, Deji, we'll grease your palm just to make me push forward that transaction. And I did two things. One, I just made it clear to him that, no, I don't do such. But in my mind, even though I might be talking to him, I might be chatting with him, he's never going to get an investment from me because he has already shown me his true side when he's already asking me that I can grease my palm just to be able to make me push, his transaction through. So I think those are just 3 points I will drop. The first, like I said, is drop the sense of entitlement. Rather, focus on how you can convince the investors that you've got their back and you can make them some money. 2, demonstrate cash flow very quickly with your business that you understand how to make money. Then 3, let your integrity shine through from every part of your business. Thanks.
That is incredibly powerful. Thank you so much, Deji. I believe that is sufficient enough for agribusinesses on this call today. And I actually wanted to allude to something I saw in the chat right now. Just as you were mentioning, the sense of dropping the sense of entitlement. Someone dropped in the chat that, he has been able to register his business and, he has gotten training and he just couldn't raise the financing for it. I believe Mokwe and they emphasized enough the need to actually bootstrap your business. And again, Deji is now mentioning that investors do not owe you money, essentially, and you need to actually put in, as much as possible internally before you start looking externally. And it is not your entitlement to get the money, you need to put in the work. So please, I believe these are really hard lessons, good learnings for us all to take cognizance of and apply directly into our businesses. Like we always say, we can't talk about everything in one first Thursday session, but we really hope that these conversations will provoke your thoughts and you can apply them directly to your businesses going forward. We're going to end this panel right here. And I know that Deji and we have an opportunity at Sahel Capital. They've been mentioning SEPA here since the panel started. And I think now is a good time to learn more about what this financing opportunity is, what is SEPA, and then we can take some questions afterwards. Over to you, Deji.
Yeah, I will just put up the presentation. I will skip through it very quickly, so that I don't take too long. I know we are short of time. Can you see my screen?
Yes, your screen's up.
Yeah, okay, all right. So like Ramat mentioned, we work with Sahel Capital. Sahel Capital actually we are a private investment firm, and we currently manage 2 different funds. One is called FAFIN, which is Fund for Agriculture Finance in Nigeria. It's a private equity fund that has been around for quite a while, since 2013. We've currently come to the end of the investment phase of that fund, and we are raising a second fund, second private equity fund on the back of that. However, last year we also were selected to manage another fund called SIFA, which is Social Enterprise Fund for Agriculture in Africa. And that's the fund that we are talking about. And that's where Mope and myself, that's where we sit. So I think I've talked about this. I wouldn't dwell here too long. So the remit of the fund, let me just go to that slide. The remit of the SEPA fund is towards smallholder farmers. Our goal is we want to catalyze economic activities among smallholder farmers. But the reality is that the logistics of making that happen is not going to be easy if we want to be investing directly in smallholder farmers. So the next best thing is to look for those social enterprises or those companies that are providing some form of benefits to the smallholder farmers. So it could either be that these companies are helping these smallholder farmers improve their productivity on the farm, or they are helping them get market access to sell their produce, or they are helping to finance them, whether it's in terms of cash or in kind, like input financing. But these companies are providing benefit to smallholder farmers. So we look for these companies, and then we provide finance to them to enable them to be able to increase in capacity and grow And by doing so, we believe that they will be able to also enable and enhance the smallholder farmers that they are providing benefits to. So think about a company that already, maybe, for example, develops like a fertilizer product that helps to improve productivity. When you enable him to do that, the moment he continues to grow his business, he's going to make that fertilizer available to more farmers. And that way, more farmers can help, get their productivity on the farm up. So that is the way we think about the impacts that we want to make. The size of the fund is about $24 million, and it's primarily a debt fund, like Mokwe mentioned, but we also have the flexibility to do some equity. So we've talked enough about debt and equity differences. So just think about it that we can do the debt, but in certain instances, we also will look to doing equity investments. Each of the investments we do will fall between $300,000 to $2.4 million. So that's another thing you need to think about. Is your business ready to receive this kind of financing, even if you're already growing and you have cash flow? Because you have to think about how much are you making. If you take a loan of $300,000, and for whatever 10% of $300,000 is about $30,000, can your business pay back $30,000 or more, depending on what interest rate is charged on that facility? So those are some of the things you need to think about. And then we also have an accompanied technical assistance facility that goes with the business. The way we think about change or driving that goal of reducing extreme poverty that we want to is two throngs. One is we help the social enterprises receive growth capital, and the second is that we enable smallholder farmers. So by providing those enterprises with growth capital, two things will happen. One, we will create more jobs as their business grows, and two, their revenue will increase. When their income increases and they are creating more jobs, there's a large span of opportunity that they are creating, and that is going to help to catalyze economic activities in the country and in the region. Then the second throng is that because of the capital you've deployed in the first phase, you're also helping the smallholder farmers to gain access to finance, to better information, to markets. There's a whole gamut of opportunities that you are creating for the smallholder farmers. And what happens is that either the volume of products they are growing on their farm is increasing, or they are beginning to source more fertilizers and more inputs. Many more women are being empowered as you do that, because you realize in certain instances there are more women that are involved in certain parts of the agricultural value chain. So the more work you do there, you're also creating that gender diversity and inclusion, as it were. And ultimately, when you walk through that process, what you're doing is you're ultimately helping to increase the productivity and the livelihood of the smallholder farmers. And eventually, with those two activities coming together, we will be able to reduce, or at least mitigate the impact of extreme poverty in the region. So with the fund, we invest across 13 countries. These are the countries that are listed here. There are some priority countries, and you see those are the starred ones. The priority countries that we focus on are Cote d'Ivoire, Ghana, Nigeria, Kenya, and Uganda. But then those other countries that you see on the list are also countries that we look to invest in. So I will pause there. If you'd like to see the team, that's Mezo, Mokwe, who is on the call, myself, Yemisi, and Tosin, and then we also have one other person. Unfortunately, our picture is not here. So thank you. I hope that was clear enough to give an overview of what CEPFA is about.
Thank you so much, Deji. That was actually quite clear enough. And I had some questions at the beginning, and before your presentation was over, you sufficiently answered all of my questions. Thank you so much. And I believe I see some agri-food businesses who are actually providing services in the area that the CEPFA fund is interested in. And I see that they've been asking, how do they connect to CEPFA, and you've already mentioned the country, so I wouldn't take that anymore. But so how do they contact you? How do they connect to CEPFA?
Yeah, so I've included here. You will see the email that they can send a message to invest@sialcp.com. So what I would advise is when you're sending a message, so that it's easy to ensure that there's a fit, right? So it's better you put in sufficient information to say what your business is, what you're looking to, how much you're looking to raise. Just give enough information that helps us to know whether this is a good fit or not. That is easier than us just saying, hi, I need money, so just provide sufficient information and that we'll be able to get back to you.
And Ramat, I don't know if we are going to add the SEFA website, because just to
Yes.
endorse what Deji has said now, is on the website we explain, for example, funding, the countries, what we're looking for in terms of the kind of company, and it's when sending an inquiry or an application to that email address, it would certainly help your case if you can tie what your company does to SEFA's requirements. So it's a good idea to read the website first.
I will drop the link to the website in the chat box.
That would be very useful. Thank you so much for both of your recommendations. And to really emphasize what you've said, we've seen quite a number of emails from agricultures. Hi, do you have funding available? As Mope and Deji has rightly said, please be detailed enough to provide as much information as you can about your business, so that your email is not deleted or thrown into the virtual trash, and you can get the response you would need. Many entrepreneurs, many agribusinesses are a fit for some funds, but because of the way they present their businesses, there's just a disconnect and they can't go forward. So thank you so much, Deji, for mentioning that. Very important. So I see some questions. I think we're doing well with time if we proceed accordingly. I already see some questions in the chat, which I would want us to take very quickly before we go into the pitch practice. So I'm going to mention ahead of the pitch practice that we will take, the time only allows us to take just 2 people. And based on what we've just said right now, many businesses, many entrepreneurs do not know how to put that Deji and Mope has shared so far on this session. We want to present the business to Deji and Mope. They are here, they are investors, and they provided a whole lot of insights. And if you think you are up for it, I'm deliberately mentioning this ahead of the practice session so that you can start preparing. So we're only going to give you 2 minutes. After 2 minutes, I am going to cut you off. So let's keep that in mind until we get there. But I would like us to spend the next 5 minutes to just take a few questions. The first being, someone has asked what the maximum ticket size is from Sahel Capital and the geographical area. I think the person is interested if you invest in countries in Eastern Africa, Southern Africa, or just West Africa. That's one question. Do you want me to take all of the questions together? I have just 3 here. Or do you want us to do one by one?
Any works, but the first one is quite easy, and it's 13 countries in Sub-Saharan Africa. So the very first, Sahel Capital has 2 funds at the moment, and we're in the process of raising a 3rd fund. The first fund is called SAFIN, and that was focused on only Nigeria, and that, as Deji mentioned, is fully invested now, so it's not making new investments. The second fund is SEFA, which is the one Deji has just presented, and SEFA invests in 13 countries. Thank you. In Sub-Saharan Africa. So those are the 13 countries. We will look at deals in any of those countries. And in terms of ticket size, minimum is approximately $300,000 and maximum is about $2.4 million.
Thank you so much. That was quite straightforward. So the second question is, so this, I am going to coin this to encapsulate as many entrepreneurs as possible. So this person is talking about a virus attack on his farm, after having invested and taking out money from a financing organization. And we know this happens to agribusinesses all the time. You've taken out a loan or you have your equity investors, and then suddenly something happens. Climate change, virus attack, pests, and so forth. So do you have some recommendations on how to manage such a process? Because after all, you still have money to pay back.
Well, the first thing you should do is, if this kind of thing happens, is contact your investor. If it's an equity investor, I would hope that they know about this already because they're quite involved with the business. And if it's a loan, then contact your lender as soon as possible. Generally, if you have taken money from an impact fund like CEPA, it's more patient capital, and they will try and work with you in order to, there are various things that can be done. The loan can be restructured, which would mean that you don't have to pay the money back according to the original schedule, and some may be pushed back. They maybe work with you in terms of the interest rate. So there are many things lenders can do, but talk to them as soon as possible. And in line with that, it isn't when the disaster happens that you should have the relationship with your lender. So it's very important that if you take out, I'll speak now about just loans rather than equity, but if you take out a loan, this is why it is really important to service your loans, pay on time, and so on and so forth, because then in the eyes of your investor or lender, you're a good credit, and so if something happens, they will work with you to do something about it.
Yeah, I will also just quickly add that I think it's important to always take out insurance when you are putting whatever you're doing. Don't think that a lot of people just take the insurance, and because they don't get anything from it, they think it's money lost. We've invested in a business before that they lost all the paddy on their farm to flood, and they were able to get a payment from their insurer just because they insured. It was even a yield-based insurance that they did, so they were able to get a payoff from the insurer. So please take insurance very seriously when you're going into farming or any form of agriculture.
Thanks so much. Two key things I'm getting from what you've both mentioned. Insurance being the first, I think that's actually extremely important. Many agribusinesses do not pay attention to that. And Mope has also mentioned about servicing your loans. So many agribusinesses, when they take out the loan, it's really about, this business must grow. They're diverting all the energies and efforts into the business. And well, maybe it's about integrity as well. But as Mope has said, when you now run into problems, you can't, go back to your investor because you've not been really, servicing your loans, paying back as to pay schedule and all of that. So I think those are two key points for me. So thank you so much for answering those questions. And I think we can go into the pitch part for the next 10 minutes now before we close out. Someone is asking about collateral, but let's see. I think I would allow Dejan if you have some time. I actually wanted to mention if you have some time to put it in the chat. Thank you so much. You already preempted.
We do, yeah. But we are flexible in terms of the collateral requirements. So.
Right. And yes, a quick one. So between application or contacting Sahel Capital or the CEPA team to, response time or actual investment, do you have some average timeline for this? How long does it typically take?
To get an investment?
Yes.
A lot depends on the company itself. So I would, in general, 4 months would probably be good. I would say 4 to 6 months, and a lot depends on the company because Digi can, I'm sure, tell you more about this. Is that from our side, obviously we move things along as quickly as possible, but people may underestimate, for example, due diligence. When we go out to do due diligence, there's all sorts of information that we require, and people are trying to run a business at the same time as providing financial statements, legal documents, and so sometimes it can take a long time to get that information back and processed and everything. So a lot of it is can be controlled by the company, but it can take time.
Right. Thanks so much. That's very useful. So I think let's go into the pitch right now. So like I earlier mentioned, we're providing an opportunity for up to 2, 3, depending on time, agribusinesses on this call to actually share their business. So this is the idea. Mope and Digi will serve as our investors. They are investors. So they are here and they will take some time to actually listen to you for 2 minutes to talk about your business. It's sort of like an elevator pitch. What do you have to say? You're meeting an investor out there just randomly and you say, oh, this is a good opportunity to sell my agribusiness. Some of you have been doing that in the chat, but well, so many chats and maybe Mope and Deji were not looking at the chat. So if you want to speak, please raise your hand. I already see some hands. If you want to ask a question, please put down your hand. But if you want to present your business, raise your hand. And please, it is for the purpose of investment, not to sell. You're not selling Gary, you're not selling your products. You are pitching for investment. A sales pitch is different from an investment pitch. Let's do this so that we can do it very rapidly and get feedback. So Ope and Beji will be giving you feedback. If you're pitching for sales, I'm going to cut you off. So please, let us be very structured in approaching this. So I am going to call out the first person I see here, Hamisu Ibrahim Bala. I hope you are ready. We really have limited time, and our people have limited time as well. They are very busy people. So Hamisu, we're asking you to unmute. And you can also share your video if you feel that you want to. The first thing I'm hearing is a motorcycle. Should we move to someone else? Okay, since that's not working out, maybe we move to someone else. Okay, I see Michael Ame. Michael Ame, can you go ahead?
Okay, I don't know if you can hear me.
Yes, we can hear you. You have
so my name is Michael Ame. I run a company called Hemam Synergy Limited. We work with smallholder farmers. Basically, we aggregate them, train them, provide input loan to them. Basically, we're focused on maize and rice farmers. And over the past, we've been in business for the past 5 years now, but we started directly supporting farmers last year. Last year, we worked with FS Commodity Trading, who provided us the part financing for about 1,500 farmers. So in total, last year, we generated revenue of above 300 million. This year, we're working with another 2,000 farmers. We also worked with FX last year. We fully paid back the loan for last year. We got about 130 million from FX last year. And this year, we also got another 150 million. And then in addition to the direct support we provide to smallholder farmers, we also do commodity aggregation. We worked with AFES last year to secure a loan of about 500 million naira under what they call the ABCP. We're able to actually draw down about 400 million naira of that loan to procure commodity, soya beans in particular, directly to the warehouse. So that commodity is still in the warehouse as I speak. We're still trying to, because of the nature of what commodity prices, turn out to be this year. So overall, this year we're hoping to do a revenue of above 600.
Okay, thank you so much, Michael. I don't know if you can hear me. Is my internet still on?
We can hear you.
Okay, so we're going to stop Michael there. I think we lost him anyway. So I want to ask DJ and Ope if you have any feedback based on his presentation.
I'm going to let Deji take this. He covers Nigeria, so.
All right. Yeah. Thanks, Michael. Not sure it's the Michael I know, but I think it's the one. So yeah, I mean, it's an interesting, can you hear me?
Yes, we can. Okay.
So it's an interesting business model. I think one of the risks that we would typically see in this kind of investment, which will be good to get comfort around, is how you manage the price volatility, especially for the two parts of the business. One is you've gone to farm, you've raised money, and you've gone to farm to produce. Ultimately, when you harvest, if the price of the commodity has moved against your cost of production, how do you mitigate against that risk? That is one, but maybe on a lesser scale is when you are even aggregating and buying off the farmers and just aggregating and selling. How do you ensure that the money you've raised and what you've procured, like you just said, now the soybean is in the warehouse, prices have probably moved a bit against you. How do you mitigate that risk? I think those are usually the most critical parts of aggregation businesses. If it's the farming related part, there are more risk because the money that is going to you, it's difficult to ring fence what has gone into the ground in terms of the production. So the question is, how do you ensure that whatever you are producing, you really can get it back, the full value of that product back, and how can you convince the investors that you can, either because something you've done before has shown that you really can, or there are certain elements that you've put in place that can help you create that ring fencing for the investor to be sure that you can get back the funds.
Thanks so much, Deji. I hope this helped the speaker and actually other, entrepreneurs who are here. And maybe for the next one, I would want some feedback on, how that speaker actually presented, if they maximized their 2 minutes to be able to convince you as potential investor. Yes, so I'm going to call Gadi Banda. I'm hoping this person is a non-Nigerian, actually, which is why I am calling on the person. So, Gadi Banda.
Hello. Yes. Yeah. Hello.
Yes, we can hear you.
All right. Thank you very much. Okay. Hi. My name is Gadi Banda. I'm based here in Malawi. I've got a small farming business, namely Clement Food. What my business does is that it has got a project whereby it is outsourcing the production of livestock to raw farmers. It is mainly concentrating on the three livestock, namely poultry, piggery, and fish. What business does is that it helps the farmer to construct a very good poultry farm on his land, and the farmer mainly contributes the land and well as resources like labor. And we help the farmer to do everything he can so that he must be able to produce the livestock at a very good large amount. We as a business, we normally harvest that livestock from him, process it before we put it on the market. We are doing this to promote large farmers so that they must transform from being subsistence farmers to fully blown up commercial farmers who can rely on livestock production as their main source of income. So far, we've managed to establish at least 3 farms, and we're in the process of establishing a processing farm. Thank you very much.
Thank you for managing my time well. Thank you so much. All right, I think I would yield to the speakers for feedback for Gadi.
So in terms of the presentation, if you want to make use of your 2 minutes, start with what you want. So it would have, this is your business, you're looking for a loan of this much or this much investment. Start with what you want, because then it helps us process the rest of the pitch, as it were. The second thing is that too much description. Focus on the results. You mentioned that, I think you said you had done 2 farms already. Focus on the results, because you don't have a lot of time. You need to tell somebody that you are a good prospect. And so describing what you do can come later. The first thing you have to do is get people interested. And what would interest them is to hear that you have results. So this is how much money you make already. These are the things that you have managed to do. We are an impact fund, so impact is very important. The number of farmers you've worked with, how much impact you've had on them. So focus on the results. And then I think the third thing, so I've already mentioned, tell us what it is that you want. Tell us the results. And the third thing is why you. So if you ask for a loan at the beginning, then maybe you want to end by saying that your company is making steady cash flows, something that tells us that there's a good reason why this is something that we should listen more to. If it's equity, tell why your business either is making lots of money now or it's going to grow very fast or whatever. But end by saying why you, and always please mention, and part of the why you actually is your either experience, expertise, network, whatever it is that you or your team have that will make this thing a success. try and mention that as well. I won't speak to the actual business as it was because I said it.
Yes, thank you so much. Start with the ask. Start with the ask. I think I enjoyed that. That's actually great feedback, and the results as well. And why are you unique? Why should an investor look at your business? Thank you so much for sharing that. I think we wouldn't be able to take any further pitches. Questions. Thank you to all of the participants who have contributed. I hope that the feedback that the speakers have provided to them also help the 100 plus people who are also on this call. And at this point, I would really want to say a very big thank you to Mpe and Deji. This is extremely important. You've shared very critical insights. And this is what many agribusinesses actually pay hundreds of dollars to receive by attending courses and masterclasses and so forth. And you have willingly and freely shared all of your experiences with us and even giving us tips and feedback. I totally appreciate this on behalf of Nourishing Africa and of course on behalf of the audience. If we can have our deck back so that we can run through the next steps and the closing. You definitely want to remain on the call because we have some resources we want to share with you as we close out. And Mpe and Deji as well, I'll crave your indulgence to please stay on the call for a few minutes because we always take a group photo. I like my photos so much. So yes. And if you still have some comments from the participants, please drop them in the chat and we'll be sure to get back to you. We'd want you to stay connected. It is really important to stay connected so that you have access to opportunities and resources in the landscape. This session is a wonderful example of, how much information can pass you by if you don't belong to the right community, if you don't subscribe to the right newsletters, and if you're not part of the trendy and updated group. So the first thing you need to do is to join our community of over 37 countries in Africa. And we would want you to share your feedback with us. We're going to share the link to the feedback form with all participants after this session so that you can tell us, what next you need us to talk about in our next First Thursday session. This feedback has always informed what speakers we bring to you, what topics we talk about the next time. So our First Thursdays are typically controlled essentially by you, the audience. So let us know what you want us to talk about next. And we want you to follow us on social media and subscribe to our newsletters. And I think I would also want our team to please drop the links to Sahel Capital social media as well and to Sephir again, so that you can always tap into these opportunities. Really important for you to stay on top of your game if you are truly out there for your agribusiness to grow. So the next thing you need to do is, of course, to join the Nourishing Africa Hub, and you will see that again on your screen. Please drop the link as to where they can go to join the community. There are several opportunities really that you can gain by becoming a member of this community. Even if you're not learning from us, you're going to be learning from other entrepreneurs. And for those of you whose businesses have really grown, you need to be sharing with other agri-food entrepreneurs out there. So it's a win-win situation. Either you've grown or you're looking to grow, you're just starting out. A community always helps. So, and finally, I would want us to take a group photo, like I always say. If you've been attending First Thursdays, you would know that Ramat does not play with the pictures. So this is the part where we can all share our videos and post for the social media, post for the camera. I totally love this section. I always come dressed for First Thursdays just for this session. So we've been on this call for 1 hour, 30 minutes now, and it's time to say goodbye, and we want to say goodbye with a group photo. If you could please do us the honors. You can also take the photos from your end, the participants, and share on social media, tag us at Nourishing Africa, or at Nourish Africa. My colleagues will drop it in the chat and tag Sahel as well. So here is me putting on my best smiles for this photo. Good to see you all. Oh, so nice to see everybody. We've been hiding those wonderful faces already. All right. I hope my smile is not getting to waste. Please let us know when the photo is done.
Thank you.
Thank you so much, everybody. We totally appreciate that you've taken the time to attend August edition of First Thursdays. We know it is evening or even nighttime in Nairobi for those of you joining us from Kenya and different parts of Africa and the world, actually. So we appreciate the time. We hope it has been a wonderful and impactful and insightful experience for you. We hope you've learned a lot, and we hope you'll continue to attend First Thursdays, give us feedback, join the community, and we're rooting for you and hoping your business is going to grow, get all the necessary funding and support, and we're really going to make Africa proud by putting out innovative products and business models out there. Thank you for attending First Thursdays. See you next time. Bye.
Thank you.
Thank you. Bye.
Thank you, Mukwe. Thank you so much, Deji. Bye.